Good morning and welcome to the Longboat Energy PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO Helge Hammer. Good morning.
Thank you, Alex, and thank you everyone for attending our Investor Meet presentation this morning. I'm very excited about this deal that we announced yesterday. We have found a strong and complementary partner in JAPEX. Before we get into the details of this deal, I just like to make you a little reminder of Norway. Norway has a large and vibrant oil and gas industry. It produces 4 million barrels per day. It's a crucial role as a gas supplier to Europe. It has an attractive and stable tax regime. It has many development projects underway, and a lot of wells are still being drilled. Therefore, I have no problems understanding that JAPEX was looking to make an entry into Norway. And I'm delighted that they found that the best way to get in was to work with Longboat and found an excellent way to reach their strategic goal. If you can move to page 3, please. So this is a truly transformational deal for Longboat, since it brings significant fresh capital into our business without diluting our shareholders. The deal is done by issuing shares in our Norwegian subsidiary, Longboat Norge AS, to give JAPEX 49.9% ownership in the Norwegian company. The company will then be renamed Longboat JAPEX Norge AS. As payment for this shareholding, they make an investment of up to $50 million in the company, which consists of 3 parts. The initial investment of $16 million is due on deal completion. And then there are 2 contingent payments, an additional $4 million, which is contingent on the completion of a small production deal, which we have ongoing. And then there is an additional up to $30 million, which is contingent on successful discovery in the Velocet exploration well, which is due to spud in Q3. In addition, JAPEX will provide a finance facility of $100 million, which is available for acquisitions and CAPEX. And this is at an attractive interest rate. That means our Norwegian joint venture company is properly financed and it's in an excellent position to exploit BD and investment opportunities in Norway. The plan is to grow and reach significant production level and reserves in the next 3 to 5 years. And we also plan to continue to drill 1 to 3 carefully selected exploration and appraisal wells per year. If you flip to page 4, so this is a very beneficial deal for Longboat. But first of all, it means injection of upfront cash without shareholder dilution. And that investment can become bigger if we have successful or contingent elements. And secondly, it allows us to hold on to the assets that we have in Longboat, the discoveries we've made, and continue to invest in these key assets, rather than having to exit them or sell them at a non-optimal time. So we can now continue to invest in Kveikje, for example, which we have strong faith in, and we can continue to build our position around Kveikje. We also know in a strong position to pursue M&A opportunities in Norway. And Norway has, as you know, many development projects underway, and we're keen to try to see if we can get interest in 1, 2, 3 attractive projects. We think the combination of Longboat with our local expertise and intimate knowledge of the Norwegian sector, combined with JAPEX, who has worldwide competence and a strong balance sheet, can become a new and very important player in Norway. And with that, I'll hand over to Nick.
Good morning, everyone. I'm Nick Ingrassia. I am the Corporate Development Director here at Longboat Energy. For those who are not familiar with JAPEX, we thought we'd provide just a little bit of background on them. JAPEX was originally founded in 1955 by the Japanese government and is now listed on the Tokyo Stock Exchange with a market capitalization of just under $2 billion. It's got a reasonable amount of production, a significant amount of which comes from Japan, but it also has operations in Indonesia, the Middle East, the US, and they're also developing a project in the UK sector of the North Sea. They've got a significant amount of reserves as well, and it's a big operation. They've got a very technically focused operation with almost 1,600 people worldwide, and they also have a sort of shared focus as we do on a net zero target by 2050. I think the two most interesting things about JAPEX that are worth taking away is firstly that it is a big business, but it's not a giant business. So therefore, the Norwegian operations and the Norwegian business that we're trying to build jointly with them will be a significant element of that business going forward. And so it will get the attention that it deserves internally at JAPEX. And I think the other thing to take away is that JAPEX remains almost just over a third owned by the Japanese government. So really, this is a strong vote of confidence by the Japanese government, not only in Longboat, but also in Norway, as Helga mentioned originally. In terms of a little bit more detail around the transaction itself, the transaction has been structured as a direct investment into our main subsidiary, Longboat Energy Norge AS. So we will be issuing primary shares to JAPEX, which means that the transaction is only subject to regulatory partner and lender approval. So no shareholder approvals are needed as part of the transaction. As Helga stated earlier, the investment is split into three parts. There's an initial cash investment of $16 million that will be payable on transaction completion. We are currently targeting transaction completion for some point in the third quarter. And that will follow some of the notifications and meetings with the ministry in Norway. We have a contingent tranche of $4 million, which will be payable on successful completion of a small production acquisition that was under negotiation at the time we started our discussions with JAPEX. And so therefore we felt that we had identified an opportunity and they needed to compensate us for that identification of an opportunity. I can't really go into detail about it now. It is being actively worked. We hope we will have more news on that in the coming months. It's relatively small, but at least it gets us started and also allows us to access some of our historic tax losses and get some real tax synergies there. We also have a contingent tranche of up to $30 million, which is payable on successful discovery at Velocet itself, drilling in the third quarter this year. The payout is based both on an amount of volume discovered and also on a sliding scale on a dollar per barrel basis, with the maximum being 200 million barrels, where it tops out at the $30 million. Just to contextualize that, in the appendix of this presentation, which is on our website, you can see that Velocet has gross mean resources per our CPR report of 177 million barrels. So you see a discovery at the mean level will get us almost all of that contingent tranche being paid. And I think that the other thing to just note is that all these amounts will be paid gross into the joint venture, which is owned sort of effectively 50-50 by the two businesses. I think the most interesting aspect of the transaction is our $100 million acquisition financing facility, which will be available for mutually agreed acquisitions and any associated development costs. It has a 5-year tenor and it's available for drawing during the first 3 years. The facility attracts a very competitive interest rate, starting in the single digits, 6%, and then ramping up to the low teens. over a number of years. This is to encourage a refinancing of the facility at the back end of it. But this should give us an enormous amount of firepower in order to go and have discussions with others. And perhaps John can speak a little bit about sort of additional debt going in as part of that.
Yeah, I mean, I think that we hope that this is almost like a MES top up, and that with this sort of combination and the joint venture, that we will be able to secure third party debt in the banking market as we envisaged originally for Longboat, and as we have for Longboat in terms of the exploration finance facility, which will continue to stay in place. And we've been, as part of this deal, we've been talking to the banks on keeping that facility in place, and that will remain. So back to you, Nick.
And I guess the joint venture will continue to be managed by Longboat. I think, as Helge said, JAPEX is very keen to partner with Longboat, and so we will continue to actively manage the joint venture. All decisions governed by a shareholder agreement. There is a hop-off point after 3 years. The analogy we use many times through the negotiation is that everyone hopes that a marriage will work out, and sometimes they don't. So we do have an ability to separate the two businesses after 3 years, should we not be able to achieve our strategic goals ultimately. But we remain very hopeful and very excited about the opportunity to partner with JAPEX in Norway.
Good. So then I get the opportunity to explain to you the strategy of the joint venture. I am Hilde Salte. I'm the managing director of Norway. And I think this is a very exciting time for Longboat Norway and the joint venture. So the strategy will predominantly focus on developments and to grow 2P reserves and to get to a significant production level within 3 to 5 years. The strategy will be delivered through one or more acquisitions with the preference for a 10 to 30% non-operated interest. We will target straightforward projects like subsea tiebacks, and the Norwegian tax system provides risk protection against the downside. I think it was also worth mentioning that Norway has a very good ESG profile, and that's also something that will add to the de-risking projects. As Helge mentioned, there is a high level of field development activity in Norway at the moment, and we believe that this provides a significant M&A opportunity for the joint venture. As you can see on the sketch on the side here, all these projects are PDOs, field development plans, that was submitted by the end of 2022. And this came out of a COVID-era tax incentive put in place by the Norwegian government to aid activity in the country. So all of these projects are now sitting with the ministry waiting for approval. There is one that's fallen away since it was submitted, but all the other ones are going and are expected to come true. This is a significant investment. It's $29 billion, and we believe that this will result in divestments. And we will then be ready to look at the best ones and hopefully pick up some of the good ones. As Helge also mentioned, we will continue to drill 1 to 3 exploration and appraisal wells per year. Norway is very active in the exploration domain as well. They are delivering more than 30 wells a year and still has high success rates and low finding cost. The joint venture already has an exciting portfolio of exploration targets. As Nick mentioned, we got the Veluset with the 177 million barrels of oil equivalents. It's a gas prospect that's coming towards the end of the summer. And then in the APA last year, 2022, we picked up Lotus next to our beloved Kveikja. And that one is a target for drilling in 2024. In addition, there is a potential appraisal opportunity on Osvik South, which we also picked up in the last APA. And this leads on to so we will target the M&A market for developments and production, but also, of course, for exploration. But in Norway, you have the APA licensing rounds, and we have had success there already, and we will continue to target very specific, high-value opportunities for the next round, in addition to looking into the farm-out market. So I think this is with the JAPEX as our joint venture partner, this sets us up for a very exciting period coming up. I'll hand over to you, Helge, I think, Nick, to talk about the Malaysia strategy.
Are you, Nick, commenting on this, or?
Would you like to start and then I can add in anything?
Yeah, I can do that. I mean, just to be clear, Malaysia is not part of this deal. Malaysia is 100% subsidiary owned by the PLC, and we will pursue growth and opportunities in Malaysia on the side of the Norwegian business. And we already have the one award that we picked up a few months ago, which is very, very exciting. Actually has a huge gas prospect in an area where there is significant infrastructure. It's exciting because Malaysia offers a lot of opportunity, not only exploration, but also a lot of undeveloped discoveries and opportunities to get into production. So I don't know if you want to add anything to that, Nick.
Look, I would just add that I think it's a very vibrant industry out there in Southeast Asia. Personally, I've worked it before when I was with Salamander Energy, which was sold in 2015 to Ophir. And I think there are probably even more opportunities than there were back then. I think the levels of competition are much lower. And unlike Northwest Europe, where we've seen really an influx of private equity, taking out the vast majority of the transactions. Private equity is shunned somewhat in Southeast Asia, especially in places like Malaysia. And so I think that creates further opportunities for a business like Longboat. We are currently in the sort of assessing opportunity stage, but the hope is that our business development and new venture efforts will come to something the next kind of 12-ish months. So that'll be another thing to look forward to in terms of, as we start to rebuild the business and where we might be going.
Thanks. And then to finalize, very exciting news that we are giving you today. The vision for Longboat is unchanged. We are out to build a significant cash generative E&P business. We will do that through M&A and with a drill bit. And by being innovative, as I think we've been with this deal, and deliver significant shareholder value. In the coming phase, which we will be extremely busy and very, very exciting, we will be fully focused on delivering a deal, our first deal in the JV in Norway. We will be focused on continuing to pursue Kveikje and the Kveikje area to create maximum value from that area, and drilling Veloset and then Lotus. And then in parallel, we will follow up our Malaysia business, and we'll be focused on delivering the next step in Malaysia in parallel with maturing our exciting exploration block. So we are in a strong position with this deal. We are fully funded and in an excellent position to deliver on this growth. And with that, I'd like to thank you all for listening this morning, and I think we have time for a few questions.
Helge, Jonathan, Hilda, and Nick, thank you very much indeed for your presentation. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Helge and team, as you can see, we have received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. Helge, if I may hand back to you, sir, to address those questions you can and give responses where appropriate to do so, and I'll pick up from you at the end.
Thanks for that. I think the lucky person to review and read the questions is Nick this time.
Lucky me. Right. Okay. So I've got a bunch of questions. I'm going to try and group some of them together because many of them are quite similar. There are several questions around the small production deal, which is contingent on sort of negotiation and approvals. So perhaps I'll take this one because it's an M&A related question. Unfortunately, we really can't go into much detail on it at the moment. But in terms of the sort of timing, I mean, we are working on it as we speak, and the hope is that will come to fruition during the third quarter. I think that it is very likely that the JAPEX deal will complete prior to the small production deal, and in fact, as you can see, we're using some of the money from the JAPEX deal in order to finance the small production deal without dilution to investors. And so I think that's likely to be the sequencing. There's a question around what is the sort of size of production deals that we're looking at and where sort of the JV is targeting. I don't know, Helge, if you want to just sort of say something about that and the sort of the medium term.
Yes, I think I think the situation has changed for us in that sense because before this deal we had to consider quite small production deals to be to not be extremely dilutive to the position that we were in. With this deal, we are in a fortunate situation. We can pursue slightly bigger deals in Norway, as you can see from the presentation that we just gave you. I think not only production deals, but also delivering deals that involve some projects that could then deliver production in the next round. So I think we'll be very focused on delivering production growth in the 3 to 5 year window.
Great, thank you, Helge. John, there are a number of questions regarding the cash between PLC and the subsidiary Norge AS. I don't know if you wanted to give a little bit of guidance on sort of how that all sort of works for people. And I think that there are several questions around what that means for the funding of the PLC going forward. So maybe you could touch on some of those aspects.
Yeah, there's an intercompany loan between PLC and Norge. It's about £3.3 million. That'll get repaid as part of this transaction. The rest of the monies will stay within LBE Norge to fund Velaset and Lotus Well and the ongoing work there. So I think that answers that question. I think I saw a question on are we going to consolidate this? This is a genuine, it might be 49.9, 50.1, but it's a genuine sharing of control. So this would be brought in as one line in equity accounting. So it will be deconsolidated.
Yeah. Nick, there is a question about employees, which I can, how many employees there will be. So there will be some secondees from JAPEX into the Norwegian company, but the other side of that is that some Norwegian staff will be able to work on Malaysian assets in terms of a time writing arrangement. So the net effect of that is that there won't actually be any significant increase in G&A costs.
Fantastic. There are a couple of clarification points just on the transaction. There's a question around, is the 49.9% interest achieved if none of the contingent payments are triggered? Yes, it is. So the base payment is for the 49.9%, and the contingents are simply additional cash should those events occur. How is success defined on Velocet? So the payment itself would actually be made on the PDO approval. So this is the plan for development. So any payment is likely to be further out in time. But I think that the way to look at that payment is that it will make up a substantial amount of any equity required to develop that asset should it be a discovery. So I think that sort of almost sort of makes that development easier to do for the joint venture and really gets it sort of further forward. So that's the way to think about that. I think we've answered some of the other questions regarding funding of overheads. There are a number of questions about valuation. It's not for us to really comment on valuation. Obviously, the see-through for what the base consideration is pretty straightforward in terms of converting that into a pound amount and dividing by our total shares outstanding, which is about 56.7 million. And we're glad that the market appreciated the transaction and has sort of rewarded us with that. A question for you, Hilda, perhaps is there's a question around the status of Egyptian vulture and that sort of area. I don't know if you want to sort of comment. I know there's a limited amount you can comment on.
Yeah. No, I'll try to do it as best as I can. It's we were very sad to see Egyptian vulture go. The lack of alignment in the partnership caused us to really being forced to relinquish it. But there is an opportunity to pick it up again and reset the clock because it had some area fees and everything encroaching on us. So at the moment, there's a lot of work going on into looking into if that is a very good opportunity with a good partnership. But I won't commit at the moment to say yes or no on that one.
Great, thank you, Hilda. I think there are again some questions around the mechanics of the transaction. Does the cash go into the joint venture? So all monies, including the 16 million, the Velocet contingent and the acquisition contingent, will all be paid into the joint venture itself. So all of those monies would be split 50-50. The way to think of this is that we contributed assets and they contributed cash, and then we own those two things. So it kind of doubles the size of the business, but then you each own half of it. So hopefully that answers that question. I think maybe there's a question, Helga, for you around sort of our ambitions for the business going forward, and do we remain ambitious for growing a business and our vision?
Yeah, I think as I think I said in the conclusion, our vision is still unchanged and still very ambitious. We like to grow Longboat into a significant independent E&P company, and this deal really puts us back on track in that sense, since we now are in an excellent position to deliver growth in Norway, and then also very keen to deliver the next step in Malaysia. So continue to drill attractive E&A wells and deliver growth in production and reserves. So the ambitions are unchanged and very, very significant. And we still have a strong following, and we really appreciate all of you who still with us after kind of a bit of a tough period. And I think it's going to be exciting times ahead.
I think there's again another question around when the cash will be paid. So the cash will be paid on completion. Completion is currently, we are hoping that the transaction will complete during the third quarter. So I don't think we can say anything more than that. And maybe I think one more question. It's something that's come up a few times, Helga, in some of our discussions with people as we've been marketing post the transaction. Is there a possibility that JAPEX will partner on Malaysia as well if the Norway deal is successful?
Yeah, that's a good question, but I think that's not something we have discussed with JAPEX. But I think JAPEX is intrigued by what we have done in Malaysia. I think both we and JAPEX would definitely want to see success in Norway, see that it works, and then who knows what could happen in the future. but that's not on the cards at all at the moment.
That's great. Thank you for that, Helga, Nick, Jonathan, and Hilda. And I think you have addressed those questions you can for investors today. And of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Helga, could I please ask you for a few closing comments?
Yeah, I'm delighted actually by the news we had yesterday, and it's great to see the reaction in the market was positive, not only the share price, but we have, overwhelmingly positive feedback from investors, institutional investors, from banks, from industry partners. So that's been wonderful actually, and I'm very excited and very eager to get going with our cooperation with JAPEX and deliver on our ambitions. Thank you all.
Helga, Jonathan, Hilda, Nick, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Longboat Energy PLC, we would like to thank you for attending today's presentation, and good morning to you all.